Hello and thanks for tuning in to our weekly mortgage and economic segment. I'm Megan Abdelaziz, RealEstateSINY.com's mortgage and economics reporter. The mortgage rates came back up after last week's slight drop. The 30-year fixed rate is at 4.72%. The 15-year fixed rate is at 3.74%, and the 5-year adjustable rate is at 3.65%. Since there has been both good and bad news happening with the country and the economy, the mortgage rates have just been riding along. Since last week's talk about Syria and the Federal Open Market Committee meeting that will take place in a couple of weeks, investors have still been cautious with investing in the stock markets. The Dow Jones and the S&P 500 both have moved up and down slightly throughout the week until Wednesday, September 4th, when they shot back up. The Dow Jones had started at about 14,817 on Thursday, August 29th. It had then took its ride until Wednesday, September 4th, when it started climbing back up and closed at about 14,930. For those same days, the S&P 500 had started at about 1,633 on Thursday, and by closing bell on Wednesday, it was at about 1,653. There were more investors putting their money into the stock markets on Wednesday, September 4th, since there was newly released data that showed the worldwide economic growth was improving. As for the 10-year U.S. Treasury bond yields, they increased this past week. On Thursday, August 29th, it started at about 2.75%. It had then increased 2.90% by Wednesday, September 4th. This may be one of the reasons that the mortgage rates actually increased as well. On Thursday, September 5th, ADP released their National Employment Report for August. This report gives us the amount of jobs added to the private sector in August, as well as the updated amount for July. According to the report, there were 176,000 jobs added to the private sector. Out of these jobs were about 71,000 for small businesses, about 74,000 were in medium businesses, and about 32,000 were in large businesses. Last August, there were only 73,000 jobs added, which shows that the labor sector of the economy is improving, slowly but surely. The updated amount of jobs added in July actually went down from 200,000 to 198,000. On Tuesday, September 3rd, Gallup.com released their report on Americans' confidence in the economy. This week, though, the report's results are for the week of August 26th and September 1st, and for the month of August. First, we looked at what Americans thought for the week, since it does play a role in the monthly averages. For that week, Americans seemed to lose confidence. Their first poll on Americans' net ratings of economic outlook showed results of 56% of Americans thinking that the economy is getting worse, while only 39% think that it is getting better. Their second poll on Americans' net ratings of current economic conditions showed results of 37% of Americans feeling that the current conditions are poor and 19% feeling that they are good or excellent. With these more negative outlooks, Gallup's Economic Confidence Index decreased to negative 18. Now to look at the monthly averages for these polls' indices. In August, the index for their poll on Americans' net ratings of economic outlook fell to negative 11, from the negative 9 it was in July. The index for their poll on Americans' net ratings of current economic conditions stayed unchanged in July, from negative 14. As for the Economic Confidence Monthly Average Index, it had fallen slightly from negative 12 in July to negative 13. Americans have seemed to lose more confidence in August, especially the last week of August, with what is happening in Syria. But it seems more Americans are viewing the economic outlook for the U.S. worse than its current conditions, which isn't very good, as we should be confident in the outlook if the economy is improving. The last report we looked at this week was the weekly application survey for the week ending August 30th. This report was released by the Mortgage Bankers Association on Wednesday, September 4th. In this report, it showed that the amount of mortgages applied for actually increased, which is probably because the mortgage rates went slightly down last week, and people are starting to realize that the mortgage rates aren't really lowering again anytime soon. Their market composite index increased 1.3%, and the refinance index increased 2%. With the refinance index increase, the amount of refinances applied for out of all mortgage applications also increased up to 61%. Lastly, we wanted to let you viewers know about a program put out by the Federal Housing Administration to help people who had difficulty keeping their homes and lost them to foreclosure, a short sale, or even bankruptcy. This program is called Back to Work, and it is to allow those who have gotten back on their feet to apply for a new mortgage after just 1 year instead of the 3 years. To be eligible for this program, you have to show that you took a reduction in your pay or you lost your job, have been able to make all your housing or rental payments on time, and have been able to pay all bills on time. You also can't have any accounts in collection. This will help out some of those people who are able to get back out on their own feet and will be in effect until September 2016. Next week, we will take a look at the U.S. Labor Statistics Employment Situation Summary Report, which is a big indicator for the economy and for the Federal Open Market Committee meeting. So make sure you check back with us next week at trendingsiny.com and here on YouTube to see where the mortgage rates will go next and to see how the labor sector is doing. Thank you for watching. Be sure to like us on Facebook, follow us on Google+ and Twitter, subscribe to our YouTube channel, which you can do by clicking the button under this video, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with RealEstateSINY.com. RealEstateSINY.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestateSINY.com.